Welcome to Deal Closers with Anette, Talie, where we focus on the deals. Our guests are real estate closers who will share in detail the whole process from finding a deal to closing it, as well as strategies and tips to help you do the same. Here is your host, Anette, Talie.
Welcome to another episode of Deal Closers. I am your host, Anette, Talie. I am very excited today because I have Carl Suverkrop and Mike Vann join me today from Trident Multifamily. Welcome, guys.
Hi,
Thank you very much. Glad to be here.
Trident Multifamily has successfully completed the acquisition of a 100-unit multifamily community, Prairie Villages Apartments, and that's in Tulsa, and also recently completed an acquisition for 174 units in Tulsa, Oklahoma also, in November 2019. So I'm very excited to have you today. So tell me a little bit about yourself. Let's start with Carl.
Well, hi. Yes, thanks, Annette. Great to be on the show. And I live in Dallas-Fort Worth, originally from South Africa. So that's why I do not have the Texas accent yet. I've been coming back and forth to Dallas since 2012, eventually immigrated here in 2015. And that was after the sale of my business in South Africa. I had already started in real estate over there. But once I moved over here, got active and very fortunate that my wife has been in the apartment industry for close on 20 years. So it really is something I chose to focus on. So, yep, now live in Dallas-Fort Worth and full-time apartment syndicator.
Awesome. And why did you decide Texas?
Well, that's where my wife was based. So, yeah, I came over for a holiday and we met and, yeah, that's just how it played out.
That's why we're in South Florida. My husband was going to school here. He's from Florida, but he's 5 hours north. And so he met me in school and then he stayed down here. And I'm from Peru and I came to study here and I ended up staying here too. So,
yep.
Nice.
So Mike, welcome. Tell us a little bit about yourself.
Thank you. Mike Vann. I actually live in Springfield, Missouri. And Carl and I and Rodney, our third partner, who lives in Oklahoma City, we've been together for about a little over 2 years now. We met a little over 2 years ago at an apartment mentorship program and decided to pursue deals together. We had done a deal earlier in the year in March, our first deal we did together. And then we decided to form Trident Multifamily and pursue everything going forward under that brand. Each of us have had been in parts of other syndications. I myself have been in 5 syndications now, totaling about 1,000 units. And but we've just done 2 under the Trident Multifamily brand. So, but I've been investing in real estate for between 15 and 20, almost 20 years now, and have done all kinds of stuff from flips, buy and holds, lease options, bought some small multifamilies, some small apartment complexes, did all that stuff on my own before I started looking into syndications, and that's where I met these 2 gentlemen. And then, like I said, this is the path we're taking forward. And our third partner, Rodney, he's not able to join us today, but he has actually been investing in real estate almost as long as I have, and used to own a home investor franchise and did just a ton of transactions there, probably over 200 transactions. Still has about 100 home portfolio of single family homes, and then he's also been in other syndications as well. But that's a little bit about him in a nutshell. But he's a lifelong entrepreneur, and now he owns some medical clinics as well as doing apartment syndication. And so we're pretty much full-time in this for the most part.
That's incredible. That's one of my goals for this year is to find a partner. And I keep hearing this recurring story that you meet them at the conferences where you go, because this is the people that are kind of resonating with you and they are kind of on the same path and doing what you want to do. So did
Yeah.
you, I think I heard that you first pursued one project together, but not really in the same company, and then you decided to form a company together?
Right, right. Yeah, and I would highly suggest that. I mean, to not just jump in with someone you meet for the first time. You need to work together on a project separately, to see if you have the synergy. See how you're going to get along when the pressure's on. I mean, things are completely different whenever you're sitting there at a conference having a beer versus when you're in the heat of a deal. There's a time crunch, there's lots of pressure, you're raising millions of dollars. You have delegated tasks for each person in the group, and so by going through that together and seeing kind of how the partnership either melds or breaks apart during that process, something I would highly suggest before ever forming something formally. And we did that on our first deal, looked back afterwards and said, hey, this is going to work. So we decided to go all in together and put all our chips in and pursue things as Trident Multifamily going forward.
Excellent. Yeah, I think that's definitely the way to go, because you want to see how people react when something doesn't go the way it's supposed to be.
Absolutely.
And be able to test. It's like a test before you jump in all the way.
Yeah.
Correct?
Absolutely.
The Deal.
All right. So what project are we going to talk about today? Tell me about the deal.
So the deal we're going to focus on today is the most recent one. It is Stratford and Brownstone. It's a 2-property portfolio consisting of 174 units total. Stratford's 102, Brownstone is 72. They're located in Tulsa, Oklahoma. They're almost adjacent to each other, just across the highway from each other. So they're operated as one portfolio as far as economies of scale goes. But it was, like I said, our second syndication that we've done together, and just closed that. It is a value add C-class deal that is in a B to B minus area. So we felt there was a lot of potential there to kind of transition the property more to be in line with the area that it's located in.
All right. So much info. So can you explain to the people that don't know, what do you mean by value add property?
Carl, you can take that.
Sure. So it is an older property. In fact, they're both pretty similar in age, built in the 60s, well maintained in terms of no real deferred maintenance. So it doesn't look dated. The seller had kept it up to date. However, he had kept it as is. So there's a ton of room for improvements, from just updating light fixtures, flooring, cabinet hardware, just bringing the apartments to be a little bit more modern. Then, I think some of them, we're busy replacing appliances. There's probably 20-year-old fridges and ranges, so we're replacing all of that. So by adding value, we're basically doing a lot of capital expenditure, a lot of improvements to the property, which is supported by higher rents in the area. So we've had a look around, and various communities around us have done the improvements and are getting better rents. So that is what we intend to follow, is do the similar improvements and then obtain the similar rents to what comparables are getting in the market.
Right. We didn't go into it blind. We're following a proven concept in the market.
Oh, okay. So you are basically taking a property that is not in a bad condition, but that it's outdated. Correct. So it's like the older, and then you're making it nice and beautiful where people are willing to pay more money for it. To rent.
Yes.
Excellent.
Yes.
All right. How did you find this property? These two properties?
So it was actually marketed. It was marketed as one deal, and it was marketed by a headline brokerage, but the broker was out of state. And as part of a big drive for Trident, we started contacting brokers. We had a big task between the three of us. I think we had a certain number of brokers we all needed to call each week just to work on our deal flow. And this is one that came through. And we just continued to entertain the broker and got further and further along. But yeah, it was on market deal. But
so it was one that was on the market, but you still you knew him from reaching out to people.
Correct. Yeah. So it wasn't on, it's LoopNet or, one of those online platforms. We got it because we had connected with the broker.
Right. And Carl makes it seem a little easier than it was. It actually was a very elongated process. It took us, 9 months actually, Carl, to get to our LOI.
Yes.
It was on the market, then it was off the market. Then the seller wanted to sell it, and then he didn't want to sell it. And so there was a lot of back and forth before we even got to where we're gonna submit an LOI.
And so what was the initial listing price for the properties?
The initial listing price was $9 million.
Okay. All right. So now you were talking a little bit about my next question, which is how did you negotiate this deal?
So the interesting thing was that the seller was self-managing, and he had owned this
since 96.
Yeah, so about 23 years, self-managing. And we found out during due diligence that he actually got a corporate lease over the properties from one oil and gas company. So for about 10 years of his ownership, he had one rent check coming in from an oil and gas company, and basically just there wasn't much leasing activity. There wasn't. I want to say
they coasted.
Yeah, he had a real good deal. He didn't have to do improvements to the property to attract residents. He had the oil and gas guys would just send him residents and pay the bill, whether it was 10 occupants or 200 occupants. So with it being self-managed, it really it was interesting, just trying to put all the pieces together. The expectation of what he wanted, being that $9 million, to what was really there, we just couldn't get to his number. So that's why Mike was saying that the process took so long. Is the seller is aware of the value add. He knows what the market's doing. He's local, and we just couldn't get to his number. So he pulled it off the market and said, he's going to do the upgrades, and he's going to realize the value, and we can come back and get it from him in 18 months or 2 years or however long it took him. And we just kept sort of entertaining every now and then. It went absolutely quiet. We'd wait 3 weeks, phone the broker again and say, well, has the guy, is the seller ready to sell yet? Eventually we just, I think we got to a final point where we said, all right, we're done. And we walked away. And then it hadn't been it was probably about 4 weeks later, the broker phoned us and said, all right, it's time to get the deal done. Like, he's willing to accept.
So they were kind of pushing and pushing and pushing to see what else they could get until you were like, you know what, we're done. And, keep it. And they were like, okay, well, maybe we shouldn't lose this opportunity.
Exactly. Right. Yes.
Awesome.
He knew we were serious buyers, and so it's better to take the deal from someone he knows is going to close than it is for them to risk the extra time on market and end up not getting the deal done. So
right, and probably the broker was like working on the owner, telling him like you're going to lose this, like you better take it, and sometimes it takes time for them to understand.
And the broker wanted to get paid.
Yes.
So,
exactly.
Towards the end,
he closed the deal.
Yes,
he spent a lot of time on the deal as well. Exactly.
Yeah.
And so they finally came down to our price, and it was we were able to get the deal done.
Right. Okay. So how much did you end up offering?
We closed the deal at 8 million.
Oh, okay.
Um,
That's a big chunk.
yes.
That is awesome. So tell me, how did you fund the deal? Did you use a lender, hard money, investors? How did this deal come together?
So we did, it's a syndication. And so with this being such a heavy value add, we're putting, little over $2 million in CapEx into the project. And so because we wanted to get most of that funded from the lender itself, we did a bridge loan. So we did a 3-year non-recourse fixed rate bridge loan and with 2 1-year extensions. So we technically could have 5 years before we had to refinance. But we figured that with the proven concept in the market being as it is, we could get the deal rehabbed in 18 to 24 months, get it rehabbed, filled up at the higher rents, thus increasing our NOI and our value, and then put the deal back on the market. So we're looking at this project. Most of our projects are based on a 5-year hold. This is a 3 to 4 year hold.
Okay, so meaning that in 5 years you are gonna sell it.
Yes.
That's the plan.
This one we're going to start marketing this one probably at the end of year 2, once we've gotten through the rehab and have our leases back up to market to where our pro forma rents are.
Excellent. So what are your plans with the $2 million of CapEx? What type of improvements are you doing to the property with this money?
Oh, that's a long list. We're going from, as far as inside the units, most of the units had tile floors, so we're not really, and the tile was in good shape, so we're not really doing much there. Where there was a need for flooring, we are going to replace the flooring. Other than that, everything from the floor up will look and feel new to the tenants. We are doing, all the cabinet boxes were good, so we're refacing the cabinets, either resurfacing or replacing countertops, repainting everything, new light fixtures, new plumbing fixtures, new toilets, which, water conservation was a big part of this capital improvements as well. We saw a big opportunity for savings and income increase there.
So you not only looked at how to increase the rents, but how to lower the expenses.
Absolutely. So operational efficiencies, as well as improve and increase rent, improve the amenities and condition and increase rents. But yeah, and we're doing everything, even as far as the switches and outlets go. I mean, everything's going to look and feel new to the residents when they come into it. We're also doing a lot of amenity upgrades. Redoing the clubhouses, the pools, adding outdoor lounge furniture, grilling areas, outdoor kitchens, dog parks.
How do you define amenities? I was looking at this property that it was a syndication, and they were adding, I don't remember what amenity it was, but I was like, oh, I don't think that's valuable to me. But, I am assuming that you guys do like a survey, or like, how do you define what type of amenities to offer? Is it based on market study of what others are offering, or how do you define this?
Yes, that's a lot of it is based on what the market's calling for, what your competitors are offering to their residents, and also what they're not offering that we could. So we look for not only just to be the same as everyone else, we want to actually find ways to to kind of step it up and be a step above what our competition's doing. One of the things we're really excited about on this property is in the laundry rooms, where we are doing smart laundries. So everything will be app based. It will be cashless. All the residents can do everything right from their phone, from their smartphone. They'll be able to go in and see when the machine is available. When their laundry's done, they'll get a notification to go back down and check their laundry. When the machine's available, they'll be able to know that from their app. They'll be able to pay right from their app.
That's awesome.
I mean, it's phenomenal. And so,
this is a third-party service, right?
Yes.
So you're not going to be managing when they are bad, when they don't work. So you are just going to kind of split the revenue of this?
We're going to get an upfront payment for rehabs of the laundry rooms. We're also going to do an 80-20 split after a certain income metric is met. And that is really good.
Yeah, that's pretty good considering that you are not investing any money, right? They are putting the machines, they are setting up the system, they are managing it, and then you're getting 20% of the revenue.
Yeah.
80% of the
80%.
80%. Yeah.
Excellent.
80-20 split. We get 80, they get 20 after.
That's pretty good because I've heard of 50-50 or 60-40.
Yeah. Yeah.
Yeah, we negotiate pretty hard.
Yes.
I can see that.
As you can tell by the $1 million reduction off the asking price.
Yeah.
And then with the upfront payment we're going to get from the vendor, it's going to more than pay for the renovations we're going to do on the laundry rooms as well, as far as, new paint, light fixtures, folding tables, all that stuff's going to cost us less than our upfront payment. So.
Excellent. And how going a little bit away from the deal, but how do you divide the responsibilities in your team? Like, does each of you have a different role, or do you all do everything, but depending on who is available?
We each specialize a little bit in certain areas that we have our strengths in, but then there's a lot of overlap as well. Mm-hmm.
Because it's important to kind of like complement each other, right?
Absolutely. And that's one of the reasons, like we said from the first deal we worked together on is we found that we really did. We complemented each other well. You have to know everything to be able to oversee the project, but being able to specialize in the areas that you have the strengths in and let your partners do the same, it really makes for a smooth project.
Excellent. All right, and going back to the bridge loan, I know, and I wasn't familiar with it until last year. So tell us a little bit about the bridge loan. Is it interest only, or is it interest and how does it work?
Carl?
Okay. So it's the first term is 36 months of interest only. It is actually a floating rate, but we have got caps. So basically, it's almost like an insurance that you purchase at the time of originating the loan. So it is capped. If the interest rates had to spike, we capped at a maximum interest rate. So for the first 36 months, we're interest only. We then, as Mike referenced, have two 1-year extensions, and in those extensions, it will be principal and interest that we start to pay down. But all going equal, if we within the first 36 months either exit the deal or refi into some more permanent debt. But we believe we should be done with our CapEx in about 18 months. So give us another 6 months to stabilize the property. So really within a 2-year period, we should have the property positioned for long-term debt or sale.
Yeah, that's excellent because, if you are planning to refi or check in 2 years and you have, the 5 years to work with, you have a pretty safe time frame where you can, you are only paying interest only for 36 months. So it's like very cheap loan.
Mm-hmm. Right. We have a lot of runway there, and we built in, obviously in our underwriting, we looked at, the interest only, but also too, if we do start paying principal and interest, depending on how the economy goes, if there's a downturn, we're well positioned to have refinance options into long-term debt as well.
Mm-hmm.
All right. So how much money did you have to put in? Like how much down payment, and did you get investors? This is a syndication. So was it what type of syndication?
Mm-hmm. So it was a 506C syndication. So we could only do accredited or only accept accredited investors. And we could publicly solicit. We really wanted to get our brand out there more than, I think we got a handful of leads for our next projects, which was ultimately the goal. But most of the investors were people that we already had our pre-existing relationships with. So it just goes to show, building your investor database, you need to get it done before you get a deal. Just because you market it nicely and put it up on Facebook does not mean you're going to get some guys to just come in and
invest their money.
Exactly. So for us, we did it purely as a marketing exercise to get our brand out there without violating any laws. And then the total we raised was just around 2.5 million. Which included, the down payment, some working capital for the property, working capital for the CapEx, because although we get it funded, the majority of it funded through the loan, it is on a draw system. So we extensively have to pay to get it done, and then it, we
and
draw.
then get reimbursed.
Correct. So yeah, it was about around 2.5 million is the total that we had to raise.
Excellent. All right. So what's you mentioned that refi, you are gonna refi or maybe sell. So what's your exit strategy? Are you planning to eventually sell it or to keep it? What's your exit from this deal?
Yeah, ideally after the 18 months, as Carl mentioned, getting all the rehab done, and another 6 months to stabilize the property, we'll start marketing it for sale at the end of year 2, and hopefully have it sold by the end of year 3. But if we do need to hold on to it, we're well positioned to do so.
Okay, so but your idea is to, because some people would like to refi and then keep it, but your position is to sell it and maybe do some other projects.
Yes.
Excellent. Wow, that I never thought of that as a marketing exercise also for your company, being new and to use this syndication to also build your brand. That was genius.
Mm-hmm. Mm-hmm. I don't know who came up with it. It's the power of 3.
Exactly.
We come up with these ideas and never know who actually originated it, but we've got an idea.
Yes.
And so, and who found the broker? Whose contact was it?
Carl's.
That was mine.
Yeah. Oh, kudos. Yeah, that's one of the things that it's that I know I have to do, like reach out to brokers, but it's kind of like scary to talk to them. I started with small multifamily, so I'm used to just doing the MLS and having my realtor talk to the realtor. And, I started doing that, and, it's just a new thing. You gotta get out there and keep doing.
Yeah, you just have to do it.
Yep. At the end of the day, they
awesome results.
Yeah, they want to sell properties, right? That's when they make the money. So, everyone builds up the hype of how to approach a broker. Really, just know what your parameters are, know what you're looking for, and that's all you need.
If you have the ability to take on a project like this, then you're going to know everything you need to know to talk to a broker.
Mm-hmm.
Yeah, that is true. That is true.
Mm-hmm.
But also having, like you said, having the parameter of what you want, because it's different trying to get a property, 40 units versus 250. You're looking at 2 different beasts.
Absolutely.
So, having the parameters, it definitely helps for them to also look at you seriously, like what you want and what you're doing. Because if you tell them I want anything in any market, they're like, right. She's not serious.
You won't get anything.
Yeah, they know that you have not done your research, you don't know your market, because you just want anything.
Right.
Definitely to have your parameters.
Expert tips.
All right, so now we come to the part of the show where you guys are going to give me 3 tips.
Good. Well, we've touched on is number 1, and these all around the acquisition, is know your numbers and know your market. A big opportunity we identified on this project, and probably the one which got us or made us dig deeper to begin with, was utility costs. So we've mentioned that utility conservation is a part of our CapEx plan. Well, because we know the market, we know that the average utility costs per unit for this property was about 50 to 60% above the market. So we just knowing our numbers, we looked at it and thought, there's an opportunity. So you need to be familiar with the market. The second thing is, again, be confident and know your numbers. So when we had the listing come through at 9 million, we did our numbers and we got to, I think originally we were at about 8.3 million. And I just spoke to the broker and said, you want 9, we can't get there. Like we're at 8.3. And I said that was contingent on more information because, like I said, it was self-managed. So we had to, verify a lot of the financial information that was being reported. And they kept, the broker try to, I'd say, wrestle us up a bit. And we just stuck with our numbers. And as the information came through, we reduced our price and said, if you want to sell it to us, we're now at 8 million. You don't have to sell it to us, sell it to anyone else. But that's where we're at. So number 2 is stick to your number. It could have been so easy to get a deal. And, even at that 8.3 number, we could have got a deal. And like I keep saying to everyone is getting a deal is not difficult. All you got to do is overpay. Like anyone can get a deal, but to get the deal that makes sense for you is you must stick to your numbers. And then the third, which we had mentioned earlier, is take your time and don't worry about walking away. This deal, I think, realistically, we walked away from it probably 4 times and said, this is it, and then we'd come back and this is it. And we'd come back. But, eventually we drew a pretty hard line in the sand and just said, we're done. And luckily enough, that same broker actually had another listing that was of interest to us. So we started pursuing that listing. And then I think he finally realized, like, hang on, these guys, they're really done. And then, that second listing didn't work out. So that's when they came back to us and said, okay, you guys actually are still looking for, for other deals. Let's get this one done. So, know your numbers in your market, stick to your numbers of your deal, and don't be afraid to walk away. And
I think that's so important because sometimes you are so willing to get that deal that you don't stick to your numbers, right? And then you put yourself in a bad position where then you get it and the numbers don't work. And,
worse, you put your investors in a bad position.
Especially in syndications, when you have other people's money, you're risking other people's money. So that's so important. And I agree with you. Stick to your numbers. I mean, for me that I invest my own money, sometimes I'm also like, oh, what if we do a little bit more? It's like, no. It doesn't work there. So you have to stick to your numbers.
Exactly. Yeah.
Thank you so much, guys, for joining me today and adding so much value and sharing your deal with me. It was so much information. I'm really grateful to have you. Thank you.
You're very welcome. And if anyone wants to reach out to us, feel free to go to our website, tridentmultifamily.com, or you can email us at info@tridentmultifamily.com. We'd be happy to help. Love talking real estate.
And
you guys are also on Facebook, right? So give your
yes, Facebook and LinkedIn. So please connect.
Yes, please connect to them. They know what they are doing. So, reach out. Thank you, guys.
Thank you.
Thank you so much. Bye-bye.
This was Deal Closers with Anette Talie, brought to you by Talie Investments. We hope that you enjoyed this episode. Our goal is to provide amazing value on your real estate journey. Connect online at www.talieinvestments.com, where you can find this episode and more. Did you like this episode? Subscribe, like, and share.